Welcome to the StockMiner.com studios here in the Black Hills of South Dakota. I'm your stockminer Brian Johnson, making professional trading simple. Welcome to the Sunday afternoon stock video. Getting ready for a new week. This week is indeed options expiration week. So, time to give my options expiration short speech, and that is I cut back on my position sizes, and I try not to hold necessarily overnight a lot during options expiration week. Typically, we see a lot of activity Monday, Tuesday, Wednesday, tends to die down Thursday, Friday. That has not been the case over the last few months. We have seen a lot of odd days of, I shouldn't say odd days, just different days of volatility and movement within the markets. Last month, we really didn't see anything. It was a very uneventful options expiration week. So, tides are turning, things are changing. We don't know what we'll see this week, but usually, in most cases, we will see increased volatility and increased movement. A lot of times it happens overnight. So you'll be in a position one time thinking, okay, I'm fine going into the close, and you'll wake up the next morning and everything will have turned against you, and you'll be like, what the? Come on. And so don't get caught up in that. Just be very careful. If you feel comfortable in your long position, it's up over resistance and holding nicely, great. You know what? Stay with it. Especially if you're up 3, 4, 5% on a position. It's unusual that a position will turn in one day by 3, 4, 5%. So, if something goes up drastically in one day and you manage to catch all of it, just because it's options expiration week doesn't mean you don't have to hold overnight on a position such as that. However, if you've made, half a percent or something like that on a move during the day, you might be a little bit more cautious, or you might want to hedge yourself going into the evening and just see what happens the next morning. So, having said that, that's how I usually play it. Back my position sizes off, and I'm just very careful about holding overnight as we enter the week. All right, so here we come. First week of the year gave us nothing but more bullish activity. Go figure. And it looks like as we closed last week that we are up and above a lot of the previous resistance areas as we see here on the Dow. Climbing steadily most of the week. One really good day, and that was the beginning of 2010, moving straight up, sideways most of the week, and then moving up again. Once again, looking to stocks to really give us a lot of movement, a lot of things to make money on, where the indices, they're not helping us out so much. As we stand, though, right now, we are up over the 10,500 level, which is the more major level in the Dow at this point. Staying up and over this is where the bulls want to be. Continuing forward. Even if they can base this thing sideways between 10,500, maybe 10,600 or whatever, it all works the best for the bulls to just keep it up here at elevated levels and not let the bears start to drag this thing down. If we look at the Dow on a daily, you can see here's that 10,500 level here, and we've tried a couple times to retest that area, and it's held very nicely so far. So no reason not to be continued neutral to bullish on these markets, as I have been for the last how many weeks. Even though we've been moving sideways, I've always remained neutral to bullish. My heart tells me that something's going to change soon, but it's always, as I've said a million times, it's always a matter of when. These markets are up way too far. They have to pull back, but if you're going short at this moment in time, you're trying to call a top. You're trying to call a top here. So we have not been given any real bearish signs yet. The momentum is falling out of this move, but until we see breaks of 10,500, and ultimately we need to get right down here below 10,200. That would be a major sign to me that the bears could be taking over, at least in the short term, if we break 10,200. Until we see that, we've got to remain neutral bullish. NDX on a 60-minute, getting up and over its overhead resistance, looking very similar to what the Dow was. And here, up and over its higher level of 1892. If we go right to a weekly, this is the most interesting. NASDAQ just seems like it wants to be pulled upwards towards this area here. We are at the 1900 area, is a level of resistance. I don't know if it's necessarily strong resistance at this point, but it is one more level of resistance that I just don't have drawn in here. So if I had it drawn in, it would be a thin line, but it would go right across here at the 1900 level. Seems that the NASDAQ wants to try to pull its way up to this 1950 to 1970 level. SPX on a 60-minute also breaking up and over these overhead resistance highs that we talked about. Last week I mentioned that if we could break 1135, I really thought 1145 to 1150 is very manageable. And we finished right at 1145. So it's been met for me. I still like 1150 as a stronger level of overhead resistance. And we may make it there coming into Monday. Let's see how the futures open and which direction they go. But let's continue to watch this little move up. Once again, move and see how it kind of gradually moves up before finally falling out of bed. However, followed by another move and another gradual move up. This move here lasted all of about a week to a week and a half. This move here has given us about a week to closing in on a week and a half. So keep that in mind. I don't know if time is a big factor in a lot of these, but it is interesting to note that we are about a week to a week and a half into this particular move here. That's about what we saw with this last move. And the formations look strikingly familiar. So keep that in mind as we make our way into options expiration week. SPX on a daily, up and above this overhead resistance, which I was watching very closely. We got to here, and I said, do you feel lucky? And some of you did feel lucky. You took a short right back into the 1115 area, only to be met this time by a very strong push through by the bulls. So continued upward. We've got 5 days up in a row. That doesn't mean we can't go 10 days up in a row, but if you're not long now, you'll want to be very careful. This is where coming into options expiration, if you want to go long, great, but if you're going long the indices, I'd be very careful holding into the following day. It might be worth it to just go ahead and take whatever profits you have at the end of the day and try to enter again the next morning. SPX on a weekly, up above this overhead resistance area now, and now pushing our way upwards. 1200 would 1150 above us. 1200. Sure, if the NASDAQ continues upwards and pulls the rest of the markets, this could happen. The financials, if the financials stay strong, that could also help push the markets up and towards the 1200 area. So we will be watching closely this week to see if it comes back and maybe retest this area. Maybe we have a couple days of a move up and then another pull back. That would be down here towards the 1120 area. We'll see if we get any kind of a retest in the next couple weeks of this resistance line that we just broke. VIX on a daily moving downwards, down 4.88% for the week. Let's see if it gives us the weekly total, down 16% total on the week. Very, very pretty indicative that there is no fear in the market right now. Market participants are not worried about the market crashing at this moment, and they seem very comfortable with putting their money into the market to the long side. And as you can see, it pushes below this heavier level of support here, right down to the dotted line. We will now start a candle over from that, and it could continue its downward plug, watching the dotted line and this lower green level for our areas of support at this point. Let's see if sometime this week that VIX turns around and manages to come back up to or above this line that we just broke. Apple on a 60. Been watching this